Good morning, ladies and gentlemen, to Commodity TV, and today the second day at PDAC 2023 here in Toronto. I have the honor to introduce you to Scott Melby, the CEO of Uranium Royalty Corp. Good morning, Scott.
Good morning. It's always a pleasure to be with Commodity TV and especially here at PDAC. Very exciting times for the uranium industry.
Oh yes, it is, and thanks for your time. Thanks being here at your booth, and let's talk about your company.
Yeah, so as we know, Uranium Royalty Corp was founded and taken public in 2019 and really modeled after the very successful royalty and streaming industry that's really grown dramatically. I think it's a $66 billion industry now in base and precious metals. But the co-founders were really shocked that we had no such vehicle in the uranium space. So we launched the company at that time. Publicly, we took it onto the NASDAQ in a year and a half ago, and now have 18 royalties in the portfolio, some significant physical uranium holdings, uranium that was bought near the bottom of the cycle, and most importantly, we're in position now for a uranium industry that's finally transitioned from an inventory-driven, oversupplied, supply overhang situation that's been typical in the uranium market for a number of years. But now we're entering into a period where it's going to be very much production-driven, where the marginal pounds required by the market are going to be supplied by a mine rather than an inventory. So it's going to use need a lot of development capital. That'll be a lot of debt equity and hopefully royalty and stream financing that we can come alongside these next-generation miners, either restart of operations or developing new mines to help fill the gap in the coming years.
Of course, then you can profit about it.
Yep.
And what do you think? What's the average price in the sector who gets needed in order to get in production?
Yeah, I think, listen, that number has definitely gone up. In an inflationary period, building any infrastructure today is quite significant. So, you know, we might have talked about a $50 sort of threshold for some of the world's better mines to come online. I think, you know, that $60 is the new $50, and you know, that would be some of the world's best mines that are restart of existing operations. I would include, you know, Cigar Lake and McArthur River are great examples where they've now not only restarted, but getting the kind of contracting activity that they see going into a more full production going forward. So, you know, that's important. We're not there it's at 60 yet, but I see all the conditions in the supply and demand of uranium, the significant gap that exists between production and consumption, and the needed mines that will need to meet the gap is pretty significant in the second half of this decade. So we'll see a lot of development. But I also think, you know, 60 is not the threshold for most mines. I think if you have a large capital development, large conventional mines, billion-dollar capital lift, you're going to need $70 or $80 at a minimum to go forward. So if you're wondering where we are in this bull market cycle, I think we're just barely into the first inning, the very beginnings of it, because we've seen significant price improvement off the bottom, but you know, more needs to happen to see real change in production. But we hope to be helping that happen through the royalty and streaming model and giving that sort of diversified exposure to investors.
What's your price target for uranium within the next 3 years? Do you have some sense?
Excuse me. I think you know, I would be shocked to not see uranium prices reaching $60 over the course of this year, just because we see a very real supply shock developing in 24, 25, 26. So when I say, yeah, it's not unreasonable to see 60 by the end of the year, it's also not unreasonable to see scenarios where you have $100 in the next couple years, and that would be driven by things like inability of Kazakhstan, the largest producer in the world, to deliver uranium to the West. We saw them struggle for much of last year to make one shipment of uranium to Western buyers through the Caspian Sea, Armenia, Azerbaijan, Black Sea. That's not encouraging for Western consumers. And I also think in a bifurcated world where Russia's very much in global sanctions situation, and who knows where China will be vis-a-vis Taiwan going forward, Kazakhstan would prove to be very strategic for those two countries that share a border with Kazakhstan. And I think we shouldn't, in the West, just assume that huge uranium producer of Kazakhstan is going to be supplying a lot of material to the West. So we better be looking to other jurisdictions, and hence where we're focusing our activities. Now that COVID is past, it's great to be able to get on planes and travel to Australia and Africa, where we're going to be meeting with counterparties, touring their mines, and seeing how we can fit in their development plans going forward. So it's very much the focus for me as the CEO of this company is to really grow that portfolio. 18 royalties is great for a young company that's only been around 3 or 4 years, but we want to see that number grow, and we have the big role models like Franco-Nevada, Sandstorm, Wheaton Precious with their big catalogs of hundreds of royalties. That's our dream. That's where we want to get to, but we've got to walk before we run, but it should be a very big year for growth for the company.
Exactly. And in your portfolio, you said 18 royalties. How many of them can get in production shortly in order to capitalize for the investors?
Yeah, well, finally, we're seeing the conditions where a number of our royalty assets are restarting production. The biggest, the most notable would be McArthur River and Cigar Lake. McArthur River, we have a physical royalty where we actually receive production from the mine delivered to our account in Ontario, Canada. Cigar Lake is a net profit interest, so it still has some calculations of, the more they produce and the higher prices that are prevailing, the sooner we start cash flowing under that. But McArthur, we're effectively accruing pounds for our account in 2023. We also have some royalties on companies like Lance Peninsula project in northeastern Wyoming, which is given indications that they're looking to restart production at the end of this year, next year. We also have an interest in Langer Heinrich mine in Namibia, where they're going through a very extensive restart of operations for Q1 2024. So it's nice. We're now getting to a point where we have visibility to cash flows. We did kind of want to reward early shareholders too, and be able to expose them and give them some capital appreciation from very strategic purchases of uranium, physical uranium that we made through Yellowcake from Kazatomprom, through the rights we have under that agreement, but also open market purchases that have averaged about $43 a pound average cost. So we've already seen some nice capital appreciation on that, and we begin to start taking off-take streaming deliveries from CGN, who operate the big Husab mine in Namibia. So exciting times for the sector. We think we have the right model, the right business model in the right commodity at the right time in the cycle. So we're very excited for what 2023 will bring.
Wow, exactly. You just mentioned it. You're at the right time, right place, and with the right commodity, just in order to get more and more successful.
Yep, exactly.
Scott, thank you for your time. Thanks for everything, and good luck for the company.
Thank you very much.
So, ladies and gentlemen, that was Scott Melby, the CEO of Uranium Royalty Corp, and you heard it. So the company is in really good shape. It's the best time for uranium, and they do have 18 royalties in their portfolio, mostly of them short-term in production. So revenues and earnings are coming. Check out the company, and we will keep you posted.